Hello, and welcome back to the Accounting Podcast, your weekly roundup of news in the accounting profession. I'm Blake Oliver.
And I'm David Leary.
And David, we are back from Atlanta, from Sage Future 2025. What a great time
We're back from
interviewing.
the future.
We're back from the future. Yes. We interviewed Aaron Harris, CTO of Sage. We got to hear all about the latest updates from Sage for Sage Intacct, Sage X3, everything they're doing with AI, their collaboration with the AI CPA. Really neat stuff going on there. I also want to talk about real world examples of AI. We've got some great examples from the Journal of Accountancy. We've got examples of apps like Field Guide putting AI into action. We're going to see exactly what they're capable of doing. KPMG has some examples of how they're using AI in audit. Lots of stats about AI adoption. Lots of app updates in general from Ignition, from Xero, from Microsoft. There's a report from Spotlight I want to talk about. What about you, David? What is new with you?
I mean, I have a lot of AI-related stuff as well, stories that tie into AI is going to disrupt the Big Four's revenue. PwC is now going to offer AI assurance services. There's a private equity strategy that deals with AI and accounting firms. And then I have some just other ones that are, arguably ethics related. So apparently Deel has been spying on other companies as well. And Danny Rerfel is going to join Alliant Group, which we've covered in the past, who is possibly, so Danny Rerfel is the former IRS commissioner. He might be joining an arguably ERC mill post his career at the IRS.
Whistleblowers are pleading to save the PCAOB. Donald Trump and Elon Musk had a big fallout.
Oh, yeah, that happened.
That might doom the big, beautiful bill in the Senate. We'll see. And that would actually save the PCAOB. Got some stats here about the fastest growing accounting firms. They're spending 2 times on marketing versus other firms. A Microsoft-backed AI startup was revealed to be actual Indians, not AI. That was a big one. They were valued at something like over $1 billion, and it turned out to be a total fraud. And a Deloitte ad that highlights the lack of work-life balance at Deloitte as a plus for their clients. So all this and more on the Accounting Podcast this week. David, let's thank our sponsors.
Yeah, so this episode's sponsors, we have OnPay, Keeper, TeamUp, and Payhawk.
David, let's talk about Sage Future 2025. And I like the way they laid out their approach to AI. Aaron Harris described 3 waves of AI. The first wave is the automation they've already been doing. The rules-based automation that doesn't use generative AI.
Or like a scan of a bill, that type of stuff that's already in product and has been in product.
Wave 2 is generative AI, and that includes their Sage Copilot product, which is now available to 400,000 plus customers worldwide. It's embedded into Sage Intacct. It's now also embedded into Sage X3, which is their big manufacturing ERP system. Wave 3 is agentic AI, and that includes agentic applications, AI orchestrating complex workflows, and autonomous agents, which they now have in testing. These are fully autonomous systems that they are hoping to release within the next few years, similar to what Intuit has been working on. Intuit is releasing AI agents into QuickBooks this month. Sage is going to take a little longer to do that. It's going to be really fascinating to see what is possible when you have AI agents embedded in your accounting system.
I mean, they're not there yet because in my QuickBooks, I went to the Ask My Expert and I clicked on it. And the only thing listed still is my accountant. There's nobody else listed there. I guess I'm hoping I'd have a team of agents listed there one day.
Welcome to our live stream viewers. Hey, Jarlin, great to see you. Hey, Dre. It's Saturday as we record this because we took Friday off since we were traveling. So maybe a little bit lighter than usual. I hope that you're enjoying your summer. It's already June here. Hard to believe it. So what's on the Sage Intacct roadmap? We learned at Sage Future that Sage aims, Aaron Harris said that his goal as CTO is to eliminate the financial close. So not speed it up. eliminate it completely. And he brought up some interesting stats about like how long it takes companies to close the books these days. It went from weeks. Now the top performers are down to a few days, and they want to eliminate it completely. And one thing that they're releasing for Sage Intacct is a close workspace, a centralized hub for managing close tasks with AI suggestions. So it will help you figure out what you need to do in the books, where the bottlenecks are in order to close those books and get them done faster.
And it's not just get rid of the close. Like his point of view is that this whole date-driven everything is a little crazy. Why do we have to wait till a certain day to depend on our numbers? Like the numbers should just be dependable all the time at any one time.
And if you have AI agents that are entering transactions, that are risk scoring different transactions, maybe it's possible to not even need to do work papers at the end of the period. I'm a little skeptical about that because all of accounting and auditing is rooted in the idea of like closing the books. But as Aaron said in our interview, that is an antiquated notion. Literally, we used to have books for each time period, and we would close them and not open them again. And that was how we, ensured accuracy. I guess if you have continuous AI agents just entering transactions, validating them at all times, maybe you could do away with that. But then you have this idea now of continuous assurance. You need to somehow provide audits on every transaction instead of over a period of time. And I'm just trying to wrap my head around how that would work. But that's where they're going. I mean, it's an ambitious vision, right?
And that seems similar to if I go back to when we were at Avalara's conference a few months back. I want to say summer, but we're just now starting summer. Maybe it was last fall. We were at Avalara's Crush conference, and they're talking about how sales tax, they're going to get rid of the concept of a quarterly or monthly sales tax report because the government agencies, they want instantly to know about the sale and instantly collect the sales tax. And so it's kind of that same concept. Like we might be marching this future where there is no more deadlines, final forms to fill out. It's just everything's going to happen in real time. Maybe that's the way to think about it. It's more real time.
Real time, yeah. I mean, maybe we'll get there someday. In the meantime, what can we actually expect from AI? I think it's going to take us a long time to get to that, eliminating the close completely. We're just going to speed it up. We'll have AI doing the work papers. One thing that Aaron mentioned in our interview with him was this idea of completely autonomous agents doing accounts payable. That was the example that he highlighted the most, and I think is really possible. The idea there is that from like procure to payment, you could have AI agents pushing the transactions through. So as soon as a purchase order is approved, you have an AI agent that then goes and gets the payment information, validates that, schedules, sets up a payment for approval, gets the approvals, follows up to make sure that the necessary people approve it, or maybe it just approves it itself if the transaction is below a certain threshold, and then schedules the payment and monitors cash flow. I really think that if you had the right AI agents set up, you could have them embedded in your workflows. If Sage can build that, that would be extremely powerful. And I can see that philosophy applying to a lot of other clerk type activities. Those jobs could be completely automated, the way a lot of bookkeeping jobs have been automated over the last dozens of years.
Especially anything data entry related for sure.
Yeah. So they also highlighted that Sage Copilot is now available in Sage X3 globally. That's their chatbot. They've got supply chain intelligence. They acquired a company called Anvil that does small and medium business supply chain management. And they have integrated this into their solution. They're saying that it reduces delays by 35% by giving more visibility into companies as to their supply chain. And they've also got this AI trust label initiative where they're providing on all their AI, they're providing information about how it works, how the data is being used, the safeguards in place. And they believe that's really important in order to get adoption of users across Sage products. That's going to be rolling out later in 2025 in the UK and the US markets. Anything I missed there, David, about Sage? Their
it was hard to
partnership
pick
with
up in the
AICPA.
keynote, but yes, they are building their own large language model. And there's a couple of reasons for it. One is the existing large language models are very inefficient. They almost know too much, and they're not specialized enough. So they're working with CPA.com, and they're using AI CPA's standards and uploading those standards and literature into Sage Copilot. So that way they're going to have, and arguably, I guess it's a more efficient model, right? I want an AI model that only knows accounting. I don't want an AI model that also knows about a movie. And
well, so I think you're actually confusing two things, David.
Okay.
So they're creating their own LLMs that are trained specifically on certain types of accounting tasks. So that would be classifying transactions or approving payments. And you can do that much more efficiently by designing an LLM that's only for that task. So can't translate between languages, isn't trained on the entire internet. It's just trained on, say, accounting transactions, like receipts or invoices or something like that. Then there's this partnership with CPA.com where they're going to license AI CPA resources to train Sage Copilot. So the AI CPA's documentation, processes, standards, all of that will be used to train Sage Copilot so that it can, I don't know exactly what it would be able to do.
Ultimately,
it could act like a CPA, I suppose. Yeah. Or make determinations that a CPA might make. And that's an interesting, thought experiment is the AI CPA now helping Sage to train an AI that could replace accountants?
And so this is one of the big issues I had with this conference is there's so much AI chat and talk happening. You don't know what's what. So it's very easy to confuse. So you're saying their efforts with the AI CPA, that's going to be its own kind of LMN. And then they have their own to do the little task. There's going to be multiple are being created, not just one. They're creating a set, two at the same time.
Yeah.
And then we had clarity because it was confusing what Copilot was versus Sage AI, because Sage AI has its own logo and branding and everything else. But Sage AI is like all the AI initiatives, and Copilot's like the UI to interact with those AIs, if you think about it that way.
So stay tuned to the Accounting Podcast for our interview with Aaron Harris that we recorded live at Sage Future. If you are interested in AI and if you're interested in Sage products, either one of those, I think you will enjoy it very much. So look forward to that coming later this week. And now let's thank our first sponsor, David. Who is that?
OnPay.
All right. Forbes and CNBC rank OnPay #1 for small business payroll. OnPay really knows how to get payroll done right for every client you serve, no matter how complex. Their software is easy to use and backed by outstanding service levels. They handle new client onboarding for free and have experts on call to keep you and your clients on track. The system includes multi-state payroll, local tax filings, integrated HR tools, and more with no hidden fees. When you join OnPay's partner program, you get a custom dashboard to easily manage all clients in one place. Plus, you can gain exclusive perks like revenue sharing or discounts, free payroll for your firm, co-branding opportunities, premium swag, and more. OnPay helps you run your practice efficiently while providing exceptional payroll that your clients can count on. To learn more about using OnPay for your firm and clients, that could be startups, farms, restaurants, bars, doctors, nonprofits, gyms, franchises, or dentists, or more, head over to accountingpodcast.promo/onpay. That's accountingpodcast.promo/ONPAY. All right, let's talk about examples of AI in use. Journal of Accountancy did a great roundup of real accountants using AI today in their practices. I want to go through these examples. Maybe they'll give you some ideas for how to use AI in your firm. Carl Spanbauer at Capital Area Food Bank created an automated mail processing system that scans physical mail, extracts text using image analysis, generates AI summaries of each document, and then creates workflow tickets automatically. He says that it's reduced the time to process the mail every week by 4 hours, over 4 hours. And now he can do it in just 20 minutes every Monday. Glenn Hopper at Aventus Advisory Group built a specialized bot that uses the firm's historical accounting memos as training data and then generates new technical accounting memos, for example, goodwill impairment analysis, and has reduced the time it takes to write a technical accounting memo from 4 hours to 30 minutes, including the human review. And it only took him, well, it's a lot. It took him 60 hours of development time and some deep AI expertise. But if you save 4 hours per memo and you're writing a lot of those, I mean, that could be well worth it, right? Here's an example for marketing. Barrett Young at GWCPA created a custom ChatGPT for succession planning advice. It can now answer basic questions about ownership transitions. He made it free for his email subscribers. And the result is that it's generated 50 new email subscribers in 3 months. What are some other applications here? Don Tomoff is saving $150 an hour by using ChatGPT to generate VBA code and data analysis scripts. So this is what you and I have done, David, recently, is just describe your problem in natural language and you get code that works. So he no longer has to outsource coding work for creating Visual Basic applications in Excel.
And these look like, it sounds like a lot of these are assistant type tasks, right? Instead of somebody opening the mail, telling you about it, or, hey, go do this research about partnerships. It's just doing it and or issuing the memos. But are there any of these use cases like full-blown end-to-end replacing somebody's job?
No. And I don't think we're going to see that anytime soon until we get to those AI agents that can work across workflows to, say, automate like AP processing. But I really think that what we're going to eliminate will be like payroll processing, accounts payable processing, these bookkeeping type of tasks that have just we haven't been able to automate yet. I really think that's where we're going to go with it. But I mean, even that, it's going to take time. All the systems have to be able to talk to each other. We've got to figure out this computer use gap that we have right now, where if the data is not available via API, you have to then go around and click in an interface, and the AI has to be able to do that, which can't always do reliably. It's going to take time, right?
And then there's this, really, it's that trust, right? Like at some level, are you going to start connecting this to your bank accounts to transfer funds to the payroll account to issue the paychecks? It's a little scary still.
Other examples in this J of A article include research, brainstorming. We've talked about that before. Yeah. Audit automation. Trisha Catabini, she uses Trulion's audit suite for automated document searching for audit evidence, financial statement footing, disclosure tiebacks, board minutes, and lease agreement summaries. So those are some great like real world examples of how companies are using AI. I also saw a story on Accounting Today about Field Guide's new AI audit agent that gives us an idea of how startups are going to be helping to automate audits. Field Guide released Field Agents for Financial Audits, and it features an AI audit testing agent that automates the entire audit testing workflow from start to finish. So here's how the system purportedly works. It automatically matches client evidence to samples. So the clients provide audit evidence. This AI agent will match it to the samples that you've selected from the GL, for instance. Then it will extract and validate the key data from the evidence provided. It will annotate and document its test results. And then it supports, I guess, various different types of tests, including revenue cutoff, expense verification, unrecorded liability testing, and fixed asset additions. So this is an example of a product, an AI product for auditors that is eliminating the manual work of sampling, testing. I guess you still have to sample, right? But you have to choose what you're going to test, and then you go and you load in the transactions that you want to test, and this agent then matches up what the client has provided with what you want to test, and does the testing. And that, to me, makes a lot of sense as something that an agent could do in the audit. What else can it do? It surfaces the discrepancies, but then it will also suggest follow-up questions to clients, draft communications, evaluate client responses, do quality checks on the new evidence, and connect the findings back to the audit objectives. And it will pre-test the evidence quality before any human review. So what does the human have to do? Now you review the work that the AI agent did, which is basically like what a senior auditor would do or a manager might do. So we're basically just skipping this whole first step. Of course, that then creates a lot of questions as to what exactly are auditors going to do when they're learning to be auditors, when they are in their first year or two. I mean, that work is what we're automating now, right? So how do they get experience? I don't have an answer to that. I guess the best answer that I've come up with or that I've heard is we're going to actually invert how accountants get trained. Instead of going to work for big public accounting firms where they get experience by doing testing and doing these manual tasks, they're just going to go straight into industry. And then once they've got experience, then they'll go work at the audit firms. That's the fundamental shift that's going to happen in our profession. But it's going to be kind of painful because we're not set up for that at all. The educational institutions, the colleges, universities, they aren't set up to send people directly into industry. Those companies aren't used to hiring. They're not used to hiring from colleges. They're used to hiring from audit firms. Right? You poach a good auditor from the firm. They come work for you if you're a controller. So I think, though, it would be like a better outcome in the end, because how can you review as an auditor what you've never done, as Nakia points out, right?
So Audit File also launched AI agents recently. And it's similar to like what you described. AI agents autonomously plan, execute, and follow up on tasks with real human approvals and feedback. So humans are still watching it. But what got me was the quote from the CEO, Stephen Bong, described the AI agents as the most dependable team member who works around the clock and never complains. So, and they've actually launched this in their Pro Plus and Enterprise plan subscribers. And they insist that these are not going to replace auditors, but it's just going to empower them with smarter, faster tools. I have other articles that we'll see. We go to other articles today on how that's going to work.
There was a story in CFO about KPMG, how they're transforming auditing with their AI-powered Clara platform, CLARA. That's what they're calling their audit platform. And it sounds like it's working similar to what Field Guide is building. The before situation is that auditors are having to manually select expenses, request documentation, compare everything, and create work papers. Now KPMG is saying that their Clara AI is allowing them to give the AI the task of identifying which expenses need testing, taking the documentation, extracting the data, generating the work papers, and then doing the testing automatically. Sounds almost exactly the same as what Field Guide has been doing. So it seems like there's some commonalities here in the areas that we're going to see AI applied to audit.
And there was an article about how AI was going to disrupt Big Four revenue. Excuse me. And according to an ex-PwC partner, up to 50% of the roles in audit, tax, and advisory could be eliminated in the next 3 to 5 years. They're saying that some AI tools can already perform 90% of the audit tasks. So they're saying already, not coming. And then obviously it's going to mess with the business model, because how do you bill for hours if AI is just doing it quicker? But I'm not sure I completely buy into that, because we covered this a while back. Last summer, or actually in 2023, we covered it. KPMG invested $2 billion in AI cloud, expecting to have a return of $12 billion in 2028. So I don't think it's actually going to disrupt the revenue, because they're going to make revenue selling AI services in the end.
And auditing AI.
Yes. Yeah, consulting, helping you roll out AI, and auditing AI. An example of this is PwC announced this week they're formally going to offer AI assurance services.
Yep.
And that's going to verify that your AI systems are responsibly designed, deployed, and managed. They'll make sure organizations are meeting regulatory expectations. It'll ensure the process includes evaluation of governance structures, data management practices, and fairness and robustness of AI models.
Stephanie in the live stream says that she's been using AI to analyze bank statements to quickly track down a rob Peter to pay Paul fraud scheme involving high interest short-term loans. It's fantastic, but imperative that I knew how to do the work the long way first. So,
but do you actually have to know how to do it first the long way? Because could you just say, I want to track this, I've never done it before, go ask the AI to go learn how to do it first, then have it go do it?
I don't know. I just feel like if to review work when you've never done the work is, you don't know all the nuance. You don't know the details. But I guess we've been training accountants to do that forever, right? Like most accountants, most CPAs don't learn how to actually do bookkeeping. I feel very lucky to have worked as a bookkeeper because I understand debits and credits really, really well. I know you can learn that in theory and be great at it without ever having done it before. But I just feel like when you've made journal entries, it's a lot easier to look at them and understand what's going on. That's just my point of view. I feel like everybody should get some experience with that. Welcome to our number one live stream viewer, Boring Accountant. By the way, if you're listening to us on the podcast feed and you haven't had a chance to join us live, subscribe on YouTube. Hit that notification button. You'll get notified when we go live and you can join us and let us know what you think. I've been talking about external audit, but what about internal audit? A recent Wolters Kluwer's survey of 4,214 internal audit professionals revealed that AI adoption among internal auditors is going to surge from the current 39% to 80% by 2026. So we're going to see AI adoption surge in internal audit. This was on a webinar that they did. And an additional 41% of respondents plan to adopt AI within the next year. You mentioned that PwC is offering independent assurance on AI systems. PwC also issued a report finding that AI is boosting jobs and wages as opposed to eliminating jobs and cutting wages. This is their 2025 Global AI Jobs Barometer report. They analyzed nearly 1 billion job postings across 6 continents, and they found that job availability increased 38% in positions with higher AI exposure. So jobs increasing 38% when there's AI exposure. And growth was actually slower than less AI exposed jobs, but there was still significant expansion. So growth is slowing, but still expanding. Jobs requiring AI skills grew 7.5% year over year, while total job postings declined 11%. Wages grew twice as fast in AI exposed industries compared to others. So there's a wage premium for workers who can use AI. So I guess what I'm understanding from these stats is that the number of jobs is going down, but because productivity is increasing, the wages are increasing. Companies most exposed to AI experienced 3 times higher revenue per employee growth compared to less exposed businesses. So this is actually like really fascinating. It's interesting for accounting because accounting and tax is highly exposed to AI, according to all these reports that you see, that list the industries and the exposure. But it's not necessarily a bad thing, because when productivity goes up, that means there's more money available to pay employees more. It doesn't all go to the shareholders. It doesn't all go to the partners.
But are these companies that are growing at these rates, I think you said 3x, if they're using AI, is it because they're using AI, or is it because they have the type of culture, they're already like winners, and those people are naturally going to use technology or naturally going to use AI? I guess it's a chicken or egg type scenario.
I don't know. David, let's think
you
our
can't just take people that are not great and say, here's AI, start using it. It's going to make your company go 3x. You have to have great people to start with.
Well, it's going to increase wages for the high performers, the people who can learn how to use this stuff and increase their productivity. It's going to eliminate the jobs for folks who can't do that. So there's going to be a split. And I think that's what's going to happen in accounting.
If you have a lot of B employees, it could turn them all into A employees. And now you have this army of A employees at your company, which would be
exactly
huge. Big
they're
impact.
more productive. They're doing 2-3 times the work, right? Their productivity goes up double, 3 times. And then the folks where you can automate their jobs, like an accounts payable clerk, right? That's going to go away.
Great. So,
all right, let's thank our second sponsor, Keeper. You want to read this one, David?
I got it. By combining client communications, file review, reporting, and task management, Keeper has everything you need to run your bookkeeping or cash practice. Keeper is an all-in-one app that allows you, your team, and your clients to easily collaborate to make your monthly close as efficient as possible, starting with a beautiful custom-branded client portal optimized for bookkeeping work. Your client can answer your questions you have about uncategorized transactions, allowing you to categorize and automatically post them to QuickBooks Online correctly, all without ever leaving Keeper. Keeper's month-end file review feature will surface transactions that may not be posted correctly, and with Keeper's customized reports, you'll be able to increase the value that your firm provides clients by giving them reports they'll actually read. Keeper's built-in task management ensures nothing falls through the cracks, and it includes time tracking so you can see where you and your team spend their time. Keeper also just announced they've added 2 new features, Keeper Email and the Tax Suite. Keeper's email features allow all your firm's email communications to appear in one shared inbox that can be easily assigned and turned into tasks for your team, ensuring no client work falls through the cracks. Keeper's new Tax Suite also allows you to expand your use of Keeper beyond your cash client. You can now use Keeper with all your tax clients too. Keeper has a very affordable and clear pricing model that starts at only $8 per client per month. To learn more why thousands of bookkeepers and accountants trust Keeper to manage their month-end close and to get 20% off your first 3 months, head over to accountingpodcast.promo/keeper. That is accountingpodcast.promo/KEEPER. Thank you, Keeper.
Elon Musk and Donald Trump have torched their bromance. From bros to foes, that was my favorite headline from Reuters. Man, it happened so fast. And I want to say, I don't know if I said it on the podcast, but I definitely called this. My dad will back me up. We were having a conversation months ago where I talked about this, like when they started partnering up and like they were complementing each other. Like I said, there's a historical parallel here. William Randolph Hearst and Theodore Roosevelt, they were allies until Roosevelt got into the presidency, and then they had a massive falling out. And for anyone interested in like historical parallels to what's going on in politics right now, that one blew up. And the headlines back then were a lot like the tweets are now. It was not pretty. It was very personal and very ugly. And I just want to take everyone through the timeline of this, because it all happened in one day on Thursday. Donald Trump was in the Oval Office meeting with German Chancellor Friedrich Merz, and it was supposed to be a 13-minute meeting, and it just blew up. Trump expressed frustration with Musk during that meeting, saying, I don't know if we will anymore have a great relationship. Within minutes, the fight moved online and it became a social media war. Musk said, without me, Trump would have lost the election. Musk posted a poll asking if it's time to create a new political party. Trump threatened to terminate government contracts with Musk's companies. Then Trump said Musk just went crazy and was wearing thin. And then by 3 p.m., Musk dropped what he called the really big bomb, alleging that Trump appears in Jeffrey Epstein investigation files and suggesting that that's why they haven't been made public. And then Musk retweeted a post calling for Trump's impeachment and for J.D. Vance to become president. Tesla shares plummeted 14%. That's their worst day since 2020. And Musk threatened to decommission SpaceX's Dragon spacecraft used for NASA missions, which would basically make it so that NASA can't fly astronauts to the space station. I mean, this could derail the big, beautiful bill. And that's why I bring it up on the show, because the one big beautiful bill got through the House with only one vote, a margin of one vote, and its future in the Senate is not certain. And if the Musk-Trump alliance falls apart, will Senate Republicans support the bill? This has huge implications for the accounting profession because of all the tax provisions in the bill. And also the PCAOB would be eliminated under the bill.
And the threat of Elon putting money to get you to compete against you in your local election at the midterm is gone now, if you're a Republican.
And I've talked about how the tariffs that Trump keeps extending, if he actually goes through with the threat, would have a really negative effect on the economy and would probably put the Republicans at a big disadvantage in the midterm elections. So imagine you've got increased prices due to tariffs, and you've got Musk now putting his money against the Republican Party or not contributing. And that's, hundreds of millions of dollars there. If the tech alliance and the MAGA alliance fall apart, that could lead to just a total loss in the midterms. And then the rest of the Trump presidency is just nothing happens because nothing can get done because you now have a split system, right? Congress, maybe even the Senate in the hands of the Democrats, which has happened in the past. That happened to McKinley with his tariffs, the ones that Trump loves to talk about. So history could be repeating itself right here.
So that big Twitter battle that was occurring, or it was on Twitter and True Social between Musk and Trump, might have been good for a company. So Deel, we've talked about Deel before. They were the company that had a spy working at Rippling.
Allegedly.
Sales data. Allegedly.
Yes.
Allegedly. Well, they have photos of the phone and a bunch of stuff now have popped up. But on June 5th, Parker Conrad, he's the Rippling founder, he tweeted that they've amended their original complaint. And now they're alleging that Deel's founder operated a criminal syndicate that stole trade secrets from at least 3 other companies besides Rippling. And one of the reports says one of those companies actually contacted U.S. law enforcement about this. So this was all getting tweeted and happening at the same time the Trump-Musk battle was going on. So nobody actually saw this story. So for Deel, it probably is, they should be thankful for this. As of this time, it's not clear who these 3 other companies are yet. But they did say that in this legal documentation that the Deel founder openly bragged about maintaining spies at other companies. For example, at All Hands, when they would hire, let's say they would hire somebody for a competitor, a new hire, if that employee brought in sensitive documents and company intelligence, they would be celebrated at the All Hands. They
that's not good.
This culture of spying.
That's bad.
And along with this other new stuff that Parker Conrad released, is they're talking about how a customer was talking to Rippling about a purchase, and they just blindly got called by Deel to be offered services the same day after they just had a meeting with Rippling. And the customer never spoke to Deel at all. They just called them out of the blue. So they give a real example of how this really was operating. Now, what's interesting, on the same day, Deel broke news, and they were bragging about how they hit $1 billion in ARR and that they were the fastest company ever to do this. Now, I don't know if you remember years ago, the fastest company to ever hit $1 billion in ARR was Zenefits, which is Rippling's founder's old company, Parker Conrad. So there's all these ties. But the best part, and I tweeted about this because Deel did, and I'll play the video. Deel was so giddy about all these tweets about they hit $1 billion in revenue, they're actually going to launch a video series on YouTube called Debunked with Deel to quote unquote debunk business myths. And you wouldn't get this. Their very first episode, Blake, is about sales processes, which I just find very ironic. You can't even make this up. So I'm going to play a little quick tweet video for you just so you can see this.
Okay, so this is a video by Deel about sales.
Correct.
Successful salespeople have a solid process. They stick to their process, and the results just follow.
What's up, everybody? Welcome to Debunk with Deel, where we bring in real industry experts to break down the biggest myths in the working world. I'm Des, and today we're diving into the world of sales. First misconception: salesmen overpromise and underdeliver.
On the account management side, they're my client, I sell them, and then they still stay as my client. So if I oversold them, I'm essentially screwing myself over in the long run there. So that's my worst fear to do. So it's a lot of really transparent conversations up front.
Sales
And we'll just stop it right there. I just find it really funny that they talk about how important processes are for sales and trust and transparency. Like you can't make this up. This is almost like a Saturday Night Live skit, this video, that the company accused of spying in other companies, possibly 4 other companies, competitors, is making videos about sales processes and transparency and trust. I don't know. You can't make this up, Blake.
Is that it for the video?
Yeah, we don't have to watch the rest of it. You get the vibe.
Okay. Well, I have a video for you, David, and this is by Deloitte. This was posted on Deloitte's Instagram account. It was shared by GBR on X. And the message here is, I shit you not, this is Deloitte's new Instagram marketing message. We make our employees work insane hours over the weekend so you don't have to. And then I watched the video and I thought, oh my God, this is their sales pitch. And the account that tweeted it is something like life at Deloitte. So, I mean, I just got to play the video
like the
for
careers
you.
account.
It's
God.
like, this is like 30 seconds. Oh, and thank you to Going Concern for pointing me to this. Like Adrian over at Going Concern wrote a great article about it.
Your daughter's turning 9 today, and your company's merger is turning on you. Time isn't on your side, but the team is. Specialists who know data, strategy, and finance.
Ben, what do you got for me?
Not what, it's who.
Hi, everyone. The dream team.
A team that knows you can't enjoy your daughter's big day, worried about your company's reputation. Deloitte. Together makes progress.
So there you go. Deloitte's ad is promoting how, as a client, you can spend Saturday at your daughter's birthday party because a team of half a dozen Deloitte people will be working on the weekend. They'll show up on a Zoom call for you, make sure that all the work gets done. I don't know if that's exactly, I mean, I guess it's a good sales pitch for the client, but is that really the message you want to be sending about what it's like to work at Deloitte? I'm not totally sure about that.
Well, how do we know those are people and not just like AI agents? Maybe Deloitte has a team of AI agents that are the dream team. It's not people. But it is funny, though, that was put on arguably probably their careers channel, Instagram. You said Deloitte Life.
It was something like, I forget it. I lost track of it because I played the video on Twitter because it's easier to play. But yeah, it's like anyway, it's something like Deloitte Life is the username. So I wanted to bring this up because it's funny, but also because, we have a retention problem in accounting, right? We have a talent crunch. And even though accounting degree enrollments have risen 12% over last year, that's great news. We still have a retention issue. And the work-life balance at the big firms is the biggest problem. The average US organization currently has 5 open accounting roles. That's more than double compared to 2025. And we have a pay disparity problem in accounting. Data scientists earn $28,000 more annually than accountants. Software developers earn $47,000 more on average. So that gets a lot of attention, but it's actually not that. The salaries at this point are not the biggest issue because salaries have gone up quite a bit. What is the issue is work-life balance. According to Deloitte's own 2024 survey, Gen Z and millennials prioritize work-life balance and growth opportunities over pay. So, as long as the pay of being an auditor is enough to live comfortably, right, that's not the big priority. 25% of Gen Z and 31% of millennials said good work-life balance is their top reason for choosing their employer. And only 19% of Gen Z and 22% of millennials ranked high salary / benefits as their main decision factor. So work-life balance is the number one reason. So that's probably why this Deloitte ad, doesn't help the profession. Is if we want to get more accountants, we need to give them their weekends. They need to have Saturday.
And if I was a competing accounting firm, I would be utilizing this as a tool to every new hire or potential new hire. Like, this is what life will be like if you go work there. You're going to have to work Saturdays.
And to point out like that we're actually doing okay as a profession. I did some research on salaries of auditors, and I compared that to this report that I saw from Smart Asset, which says in order to live comfortably in every state, you need to make at least $80,000 as a single adult. And then I compared that to what, auditors are making, and we're actually doing okay. Like the average auditor, the average senior auditor is making over what you need to make, even in a state like, well, close to it, California, New York. In California, you need to make $120,000 as a single adult to live comfortably, according to this report. In New York, it's $115,000. The methodology is very simple. It's the MIT living wage calculator. So the rule is that you should spend 50% of your salary on necessities, 30% on discretionary spending, and 20% on savings /debt /investments. So that's your comfortable living thresholds. So we're actually doing okay as a profession. Like salaries have gone up enough, but the work-life balance part, that's where we need to work on.
I guess I'll tie this up to Big Four a little bit, even though it's not truly Big Four, but this is a follow-up story. Sue Coffey, who is the CEO of public accounting at the AICPA, she says that the removal of CPA from public profiles is a mistake. So she penned, yeah, duh, no kidding. She penned an article for the Journal of Accountancy defending the use of CPA, and I'll quote, unquote, "We've heard reports that some accounting firms, mostly recently those with private equity backing, are recommending that partners and employees remove CPA from their public profiles. I think this is a mistake." And not only that, she's trying to gather data about this, and she's created a 2-question poll, and I'll put the link in the chat here for everybody to do, and you can just give her your opinion. She's gathering data on why it's not okay for firms to ask you to remove the CPA. And I forget what the second question was, but it's just 2 questions. You can go in there and give your opinion on this.
Right. But why are firms doing this? The reason that firms are doing this is because state boards of accountancy are giving them a hard time. If you operate across state lines, if you have CPAs licensed in various states and you serve clients all over the country, and especially if you operate with this alternative practice structure where you have part of the firm that's a CPA firm and part of the firm that's not a CPA firm, it's really hard to be compliant with all the state boards of accountancy. And you're almost guaranteed to run into trouble if your people are using CPA. So a lot of these firms have just decided to tell all their CPAs not to put CPA on their business card, not to put it on the website, even not to put it on LinkedIn. So
because
my
the
question
hassle
is,
of dealing with each state is just annoying. So just why deal with 50 organizations?
So we have the AICPA telling firms they shouldn't be telling their people to do this, but not addressing the root cause of the problem, which is the regulation. And the AICPA is the best positioned organization to get the state boards of accountancy in line to fix this problem. So I want to know, what are they doing to fix it? And we asked Mark Koziel that question when we had him on the show about this issue. And other than talking to stakeholders, I haven't heard any concrete answer for what they're going to do to change the situation so that the lawyers at these firms and the managing partners feel comfortable letting everyone use the CPA. That's what we need. We need a solution from the nationwide body that represents CPAs to make this safe for the firms and for the CPAs. Since we're talking about AICPA and we're talking about the future of our profession, I might as well bring up a story related to the 150-hour rule, my favorite topic. The 150-hour rule often required people to go get a master's degree. Something like 30 states have either moved in that direction or are going to very soon, getting rid of the requirement for an extra year of education. And here's a survey that proves that might have been a good decision. Master's degrees don't improve job performance. This is according to an article in CPA Practice Advisor, based on a Resume Genius survey of 1,000 hiring managers. Over half, 62% of these hiring managers said that master's degrees offer no performance advantage over a bachelor's plus 2 years of experience. 52%, half of them, see identical performance levels, and 10% even say that master's holders actually perform worse. But here's the crazy part. 72% of these hiring managers would still pay master's holders more money. So these hiring managers are saying, like the majority of them say that having a master's degree is no guarantee of performance advantage. And yet, the vast majority of them, 72%, would pay more money. So this is an interesting disconnect here, that you go get a master's degree and you probably will make more money, but it won't necessarily improve your performance.
I'm going to disconnect it a little bit more for you. I have an article that was a survey done by Resume Templates. The results of the survey is 1 in 4 employees say they plan to eliminate bachelor degree requirements for some roles by the end of 2025. So the pendulum's swinging to experience, not even having a degree. So because, like you just illustrated, just because you have your master's doesn't mean you're a better employee. Somebody who's experienced and doesn't have that MBA or a master's is probably just as valuable, if not more valuable.
I think we need to thank our next sponsor, David. Who is that?
This is Team Up. I can read it if you'd like.
Go for it.
If you're a growing firm struggling to scale or turning away clients because you can't find the accountant talent you need, listen up. You probably want to hire a person, not a company. You've heard about hiring in the Philippines, but using outsourcing companies comes with endless turnover and mediocre talent. Introducing Team Up. Team Up helps accounting firms hire top Filipino talent directly. No middleman, no corporate policies getting in the way. And when you hire direct, you own the relationship completely, training them your way and building your own culture. And think about it from the accountant's perspective. They'd rather work directly with you than sit in a corporate cubicle. And these are accountants. They can do the math. They know they're getting a fraction of what you're paying the outsourcing company. Ready to see what hiring a person in the Philippines would cost? Team Up just released their 2025 salary guide for accounting talent in the Philippines. It's completely free for our listeners. You'll get current market rates for various roles, real candidate profiles, and everything you need to hire confidently. To download your free copy today, head over to accountingpodcast.promo/teamup. That is accountingpodcast.promo/TEAMUP. Thank you, Team Up.
All right, I want to go back to the Trump-Musk fallout because this has been building for a while, apparently. And it has a lot to do with the one big, beautiful bill, which is at odds with Elon Musk's Department of Government Efficiency efforts. So Elon allied with Trump. He went in to the federal government in a special office of the president called the Department of Government Efficiency to cut government spending. And he didn't quite get to his goal of $2 trillion, but maybe 10% of the way there, something like that, cut over $150 billion of spending. But then the bill to update the budget actually doesn't ensure that these cuts will remain permanent. And I think that's a big part of the frustration that Musk was feeling. The bill would actually increase yearly budget deficits by $2.4 trillion over 10 years. That's according to the Congressional Budget Office. And only $9 billion of government efficiency cuts would be codified. So basically, if you don't actually cut the budget of these agencies, as soon as DOGE goes away, the agencies can just rehire, expand again, spend more, right? So it was all just for show. That's what it feels like. Musk called the legislation a disgusting abomination and outrageous and pork-filled. Apparently, the final straw was, well, before I mention that, I should mention that the bill also eliminates the electric vehicle tax credit, which really hurts which really hurts Musk's company Tesla.
And I think solar stuff as well, like energy stuff. Yeah.
Oh, yeah. The solar industry is going to be decimated by this bill. The EV tax credit, it's a $7,500 EV buyer credit, and it would have cost Tesla approximately $1.2 billion in annual profits. And that goes away under this bill. So that's really bad news for Tesla. Separate legislation targeting California's EV mandates threatens another $2 billion in Tesla's regulatory credit sales. Together, the measures could eliminate roughly half of Tesla's expected $6 billion in earnings before interest and taxes this year, which would be really, really bad for Tesla. And sucks for Musk because he invested over $250 million to help Trump win the election.
Yeah, if you take a time machine and think about this, let's go back to October before the election. Oh, Musk is spending all this money to help Trump get elected. Guess what? Come June, the big beautiful bill is going to eliminate a bunch of subsidies for him. You would have never jumped those two dots ever.
No,
it doesn't make any sense.
I mean, $6 billion. It could cost him $6 billion. It could cost Tesla $6 billion, and he invested $250 million to get the guy elected. It's not a good ROI. Very negative ROI there. So, I mean, that's got to be why he's pissed off. Oh, what was the last straw? I forgot to mention that. So that was, it was Trump withdrew Jared Isaacman from his nomination to be NASA administrator. And this was like Musk's handpicked guy to lead NASA, who has close ties to Musk and had purchased SpaceX flights. So, you're Elon Musk. You have a big contract with NASA for SpaceX, your rocket company. You want your guy in as the NASA head of NASA, and Trump withdrew him. So that was the last straw. That's why this whole thing blew up. So it doesn't seem like it worked out really good for Musk. It's not looking pretty, but it could also work out really bad for the Republicans in Congress, because if Musk wanted to, he could really screw up the election for them, the midterms. So it's just like the whole thing could fall apart. Like the whole Trump presidency, basically the one big beautiful bill could fall apart in the Senate, and they could lose in the midterms, and that's it, right? This is Trump's last shot. So why is this potentially good news for the accountants or auditors? I mean, I guess it depends on your point of view, but it's the fact that the PCAOB would be eliminated by the one big beautiful bill. The auditor of the auditors, the Public Company Accounting Oversight Board, would go away. And I guess that might be good news if you're an audit partner who doesn't like dealing with the PCAOB, but could be really bad news for the profession in general, because like what led to the PCAOB's formation? It was Enron. It was WorldCom. These two giant corporate accounting scandals led to the formation of the PCAOB. And the whistleblowers, the Enron VP who blew the whistle on Enron, Sharon Watkins, and the VP at WorldCom, Cynthia Cooper, who blew the whistle, they have come out with a New York Times guest essay defending the PCAOB against the proposal to eliminate it. And, like they point out that before the PCAOB, accounting firms basically policed themselves. And how well did that go? If you are interested in learning more about this topic, subscribe to the Earmark podcast. I have an interview with 3 accounting academics all about the PCAOB, the proposal to eliminate it, whether or not it's effective. Is there $400 million a year worth it to the economy? Go listen to that. I think this is like a big issue, and I'm kind of surprised that there's not more discussion about it, because it would basically be the biggest change to accounting, to our profession, in 20 years if this bill goes through.
Yeah, it would be the exact opposite, 180 degrees opposite of what it was when they implemented it.
Yep. Enron. It just goes away.
So I have a story going off the words. What did you say? It's good to have one of your people in the government agency?
I would love to hear that. But first, we got to thank our final sponsor of this episode,
okay.
Payhawk. Are you drowning in month-end expense chaos? Imagine getting multiple days back each month that you're currently losing to manual accounting processes. This is why I'm excited to tell you about Payhawk, a leading spend management solution that can automate your financial processes while giving you total control and instant visibility over all your company spending. Payhawk unifies your corporate cards, expense management, accounts payable, and procurement into a single platform. The best part, it works with your existing credit cards and tracks transactions as they happen, giving you real-time insights into your spend. No more chasing receipts. Payhawk's automation handles that. No more end-of-month surprises. See exactly where your money's going the moment it's spent. And with real-time integrations to systems like NetSuite, QuickBooks, and Sage Intacct, reconciling expenses is faster than ever. Finance teams using Payhawk are saving days of work each month while gaining better cost control, real-time visibility, and the ability to focus on strategic priorities instead of expense reports. Ready to transform how your company manages spending and see how Payhawk can work for your business? Head over to accountingpodcast.promo/Payhawk. That's accountingpodcast.promo/PAYHAWK. And now, David, what were you going to tell me about?
So, we talked about this last week. The Federal Tax Updates podcast had an interview with Daniel Werfel, the former IRS commissioner. And I listened to it. It was great. And I even told my wife, I was like, you got to listen to this because he comes off in the interview as one of the good guys in D.C. You listen to it and you're like, this is great. I hope everybody in the IRS and everybody in D.C. is like this. But maybe I was wrong. So yesterday, according to the Alliant Group CEO, so do you remember Alliant Group? We talked to about them a while back.
Yeah, weren't they like raided by the FBI or something?
They were raided by the FBI and the IRS. And arguably, they're a questionable ERC mill. They're a little aggressive with ERC and R&D credits type stuff, so they were being investigated. They also have been lit up very bad. Their CEO has been accused of sexual harassment type stuff, and the reviews from the employees are really, really bad and negative. So it's not the most stand-up place. Well, according to the Alliant Group CEO yesterday on LinkedIn, and it was confirmed by a reshare from former Irish Commissioner Charles Reddick on LinkedIn, Danny Werfel is joining the Alliant Group. So,
all right.
so think about this. Basically, we have our current IRS Commissioner nominee peddled for an ERC mill, and now the outgoing one possibly might be going to work for another ERC mill. It's really disheartening in a way. And
well, these guys got to make their money somehow, I guess.
Well, it's like you said,
those government
the accounting
salaries
tax,
aren't
the industrial
amazing.
complex, the people going in and out, in and out. So
Yeah.
I went to the advisory board website for the Alliant Group. Here's what's on there: a former U.S. Senator, State Attorney General, State Tax Commissioner, U.S. Secretary of Agriculture, 4 U.S. Congressmen, counsel to Senate and Finance Committee, a governor and another congressman, IRS Senior Manager, IRS National Program Manager, Irish Commissioner Acting, Irish Commissioner Small Business Self-Employed Division, Irish Director of Practice and Procedures, and 17 CPAs. That's the board of this company. And so they're all government people, the vast majority going in and out. And it's just like, it's like the biggest example of this industrial complex stuff going in and out, because nothing really, from what I can tell, nothing happened from the raid.
Well, there haven't been any charges yet.
Yes. This happened in June of 2022.
So
no charges yet
May
after all
and
this time?
June, reports indicate that federal grand jury subpoenas were issued to CPA firms that referred clients to Alliant Group. There have been rumors of a grand jury hearing to determine if evidence supports criminal charges, but no official charges have been announced. The investigation remains ongoing. So, I mean, it's been a while. Maybe they're going to drop it. Maybe nothing will come of this.
Well, of course, if you
It's
have all
all-
your
it's all
buddies,
alleged.
Yeah, if you're promising people, maybe your buddies work in the IRS, you're going to give them jobs and they leave the IRS. This is not a good look, and it's yucky. It's really yucky because we're supposed to be the industry that has ethics. And we're no better than the pharmaceutical and food and drug and all these other government agencies where people go in and out and out. And you actually, I think, brought this up with the PCAOB before. people, the fines aren't very hard on firms because PCOB is staffed
Right.
by partners from firms, and they swing back and forth.
Right. You're a director at a big four firm. You go work for the PCOB. Then you go back and work for the firm as a partner. So you're not going to fine a big four firm a lot of money. You don't want to be that guy or gal. David, I want to finish up with a wild story about a Microsoft-backed AI startup exposed as an elaborate human fraud. Builder.ai was a Microsoft-backed startup that promised clients an AI-powered app development platform featuring an AI assistant named Natasha. In reality, the company was employing 700 human engineers in India to pose as the AI chatbot and manually code all the applications. So in this case, AI was actually Indians. They generated only $50 million in actual revenue while claiming $220 million. A lender seized $37 million after discovering the financial discrepancies. The company owes Amazon $85 million and Microsoft $30 million for unpaid cloud services. They have filed for bankruptcy in the UK, India, and the US, and there are multiple lawsuits against the company by former employees. I guess we knew this was coming. There have been lots of AI frauds, and this was the joke when ChatGPT came out.
Well, even before that,
really...
Amazon Alexa, right? A lot of these tools are being used like that. They're just being thrown over the wall to a human.
So, funny story, I guess, buyer beware. AI might be actually Indians.
And I was following this as an accounting story for months now, but I never really pulled it into the show because they were having problems getting out their financial reports. And I was just like, why are they not using AI to knock out their financial reports? But now we know why. They didn't actually have any human accountants on staff. They just had some engineers to do the work.
All right, David, that's all the time we have for this week. If you want to send us a message, you can email us, theaccountingpodcast@earmark.me. Don't forget, you can earn free continuing professional education credit, NASBA approved CPE credits for listening. Get the Earmark app. Go to earmark.app in your web browser or download the app for iOS or Android. Create a free account. Find our show. You can look up the channel, The Accounting Podcast, and earn a free CPE credit every week for listening. Just take a quick 5-question quiz after you listen, and you'll get a CPE certificate delivered to you via email. I will be at AICPA Engage this week, so if you're tuning into the live stream and you're going to be there, let me know. Shoot me an email. Would love to meet up with you. And I think that's a wrap.
So when you're at AICPA Engage, I think the IRS criminal division is always there recruiting to hire. Try to get some inside information about Alliant Group. Find out what the status of that is.
All right.
It'd be interesting to know.
I'll check it out. Thanks, everyone who tuned in to us on this Saturday. As always, you can usually catch us on Friday morning, afternoon, wherever you are in the world. Hope to see you again next week. Bye, everyone.